Hey folks, Dan Frio here, the rate update. Today is September 20th, 2021. Are you kidding me? It's like the world's ending. Don't go away. We're going to talk about that next. All right, so you're saying, why did the market crash today? Well, unless you're really following the markets like we do here, you probably didn't know some of this stuff that was coming out. So I honestly didn't think that this China Evergrande was going to trickle into the States or a worldwide catastrophic event. I think it's going to be a blip in the radar. And watch this video here. It explains a little bit about what it is and what's happening. And then when we come back, I'm going to give you some other information. Then we're going to go over rates.
Welcome to Trading Nation. I'm Seema Modi. 13 years ago this week, Lehman Brothers declared bankruptcy, a move which sent devastating ripple effects across the market. Now a similar crisis is brewing in China, with a juggernaut there struggling under $300 billion in debt. Let's break it down with an expert in this space, Ed Yardeni, president of Yardeni Research. The story around Evergrande, a huge property developer in China, more than $300 billion in debt. Ed, how do you see the story playing out?
Well, I don't think it's going to be Lehman. Lehman was a company that had huge impact on the global economy, global credit markets. They had derivatives that were bought on a worldwide basis. And so when they blew up, it just created havoc in the global financial markets. And it converted sort of a garden variety sell-off in the stock market into an outright bear market. This Evergrande situation, I think if it's similar to anything, it's similar to long-term capital management, which is the calamity that occurred in 1998. But that was dealt with very quickly by the Federal Reserve and the major banks, and it didn't have any global implications, and it led to a correction. So I don't see a bear market here resulting from Evergrande. Maybe a correction, but even that I'm not convinced is going to happen. The reality is it is too big to fail, and I think the Chinese government is going to intervene big time. I don't think they're going to save management. I think management's going to lose their jobs. Maybe we won't see them again, as sometimes happens in that part of the world. But it will be restructured and in a way that won't harm the economy too much over there and won't affect the global economy or financial markets the way Lehman did.
As we try to understand.
I don't know if you remember when I say this quite a bit. Bad news in the world, bad news for the United States economy, bad news for our health is basically good news for interest rates. So that's what we're seeing today in a triple witching hour. So here's what we got today alone. So you're saying, why are the markets crashing? Well, the video explains some parts of the Evergrande, debacle that's going on right now. They also touch base a little bit on, the Federal Reserve, COVID, and everything else. But I wanted to break it down for you, and then let's talk about the housing market and how this is going to affect everything. So the first thing we have is the Evergrande. It's basically a Chinese real estate company, and they're most likely going to default, or the potential default is there, but I don't think the Chinese government's going to allow that. So that's the part of that. Should it really affect, like the video that you watch, should it affect Apple earnings? Probably not. Should it affect Facebook earnings? Probably not. How about, some of the semiconductor chips? No. Ford? No. So it's probably in the general perspective of things, it shouldn't really have crashed the whole market. Some segments of it could have been adjusted, but this might just be a reason for people to pull back and pull out some profits. So just think of that. So I think we're going to have a rebound right off of this news. The next thing is we have the tapering and inflation fears that the Federal Reserve is going to talk about. We're going to have much more of that news on Wednesday. So on Wednesday at noon, around noon or 1, I'll have a special alert telling you what the Federal Reserve came out and said. The next thing is, a lot of people don't take this into perspective. We know higher taxes are right around the corner. Why? Well, they're trying to approve a $3 trillion infrastructure bill. How's it going to get paid? Their taxes are going to have to get raised. So that's another thing that's popping up today that you might have been missing that on your radar as well. Again, the Federal Reserve, they're going to come out, the word tapering, you're going to hear tapering, and they're also going to push around the terms of inflation. I think that's going to be transitory. And then last but not least, COVID and the Delta variant. So let's dig in on this. It might be a little lengthy, but I think it's going to be well worth it, especially for if you're looking for a mortgage, you're looking for a house, it's a good time to buy, even for your retirement plans and maybe your stock portfolio. So let's dive into it. China's embattled developer Evergrande is on the brink of default. Here's why it matters. That's one of the videos that we just watched. The next thing is, again, COVID is about to become America's deadliest pandemic. I wish they would have, bring to the forefront other things in this, but it's not a political channel. I don't want to go down that route, but heart disease, obesity, smoking. You could be obese, eat junk food all day long, be on depression drugs and a chronic smoker. It's okay. But you don't get the COVID vaccine, you basically lose your job. So I don't really want backlash from that, please, but it doesn't make sense, guys. Yes, COVID is terrible. So is smoking. So is alcoholism. So is this, the pill popping that we have in our society. But the big drug companies, they're bribing the politicians. The big tobacco companies bribing the politicians. You don't see anything about those things. That's the frustrating part about a lot of this stuff. So let's go to the next piece of the equation. Federal Reserve, their meeting looms large as investors wonder about tapering. So what is tapering? Let's bring that up right now, and then we're going to go over rates and everything else. The tapering piece is going to be the biggest piece of this puzzle. So tapering, what happens is, or what's happening right now, is the Federal Reserve is coming in and buying mortgage-backed securities in the tune of $40 billion a month. The tapering piece of this is saying they're not going to stop. When the Federal Reserve comes out and says, okay, the economy's good, we're going to stop tapering or stop buying mortgage-backed securities and other bonds. They're not going to stop like that. They're going to taper. And taper means you start to just pull back. So they're buying $40 billion worth of mortgage-backed securities a month. I'm going to explain mortgage-backed securities here in a second. But when they talk about tapering, they're going to start lessening or reducing the amount of mortgage-backed securities they're looking to buy. Okay. So today we had a nice little bump up in mortgage-backed securities, and I'm going to show you that here in a second. Why? Well, because all this other stuff is completely terrible news for the world, for our economy, for a lot of things. Bad news in the economy is great news for interest rates. So you might hear tonight in the news, when you're watching the news, people are fleeing to safety. What do they mean by that? So basically, you're in the stock market and you're going like gangbusters and things are going real well. And then you're like, I think the economy's not so good right now. I'm going to pull out of stocks and put my money into safe bets where I can't lose my money. Normally, those are bonds, cash. You can't stay in cash because the interest rate you get on cash is basically 0.000009. So, inflation is 2, 3, 4, 8% possibly. So if you're getting no interest, but inflation is at 2, 3, 4, 5%, you're losing that much of your purchasing power in your dollar each year. So basically the whole point I want to make here is, guys, the one part of the China equation, it had a blip in the radar. I don't think it's going to be long lasted. The COVID, it's a moving pendulum. It was COVID, now it's Delta, how it's going to affect things and so forth. It will, but it's going to dissipate. Okay. And the next thing is what the Federal Reserve is going to do. I don't think they're going to do anything until the December meeting. And there's a lot of reasons behind that. Employment numbers aren't coming in as they thought they would. Inflation, honestly, the last week we had inflation numbers came out. They are actually going down a little bit. So that's the news today and what's happening, to put it, so you can put some knowledge behind why the market crashed and why maybe mortgage rates went down a little bit. And this morning we discussed the housing market. So that's that news. So where are we with mortgage-backed securities? I said I would post at the end of the day what happened to those. They didn't really budge since, that was just 19 a second ago when I started the video. So it is giving back. We did lock people in earlier today because I see this being short-lived, but I do think we're going to have a nice little rally. But there's so much uncertainty out there right now with all this stuff. We err on the side of caution. This is what's going on with mortgage-backed securities market. Just to explain this to the newbies, we follow this number right here. Why? This is what happened to the price of a mortgage-backed security today. What a mortgage-backed security is, it's a bond that trades on Wall Street that is the biggest component of your mortgage rate. Okay, so we watch it, and here's where we are today. I don't know where this is. It doesn't look like here. Let me refresh the screen and see if I can bring up that where the green chart is, because we are up for the day. I don't know. Let's go to the intraday chart so I can show you what's going on there. All right. So when I posted, it was right about here this morning, and we had a nice run all the way through the market. Now we're having some profit taking. What happened is there was such a big run in this. Again, it's a bond. People are going to sell off because they made money, and they did that. So this is, we are up for the day, which is good. I think we're going to roll into a couple more days like this because we are way underneath our charting here. If you go through this real quick, these lines right here are Fibonacci levels that create resistance levels up and down. So think of these as bumpers, on let's say guardrails. You're driving and you hit a guardrail, and then you go over here and you're out of control. You hit this guardrail. It's keeping you in line right in here. Okay. So where I am assuming, I won't say assume, where I expect us to be trading here in the next couple days is right in this range right here, 101.2. And we can rally all the way up to 101.4 if we have some, I'll say in the flip side, we have some bad news in the economy that could really help this equation. Well, you might see on Wednesday when the Federal Reserve comes out, they might come out and surprise the markets, which I wouldn't be surprised about. And say, you know what, guys, we have no plans of tapering right now still, again, because the jobs numbers aren't where they need to be. The Delta variant is throwing havoc on the market. Now we have the Chinese Evergrande developer that might be defaulting. It's all catastrophic news. So we're not going to go in and even upset the apple cart any more than what's being upset right now. So let's go on to where rates are today. These are Friday's numbers, so they don't have today's numbers baked into them yet. But what I do is I post every day what's going on with Black Knight. They post 30-year mortgage rates all over the country where the averages are. Okay, and here they are, 30-year jumbo or conforming, jumbo, FHA, and VA right here. Okay, what the 1 day, 7 day, and 4 week delta means, it's a delta means change. So since Friday, rates were 2 basis points higher than where they were on Thursday. Okay, 2 basis points, that would have made this number here 3.07. They went up 2 basis points, now they're at 3.09. So 2 basis points in math equate out to 0.02. Okay, parentheses mean they went down. No parentheses mean they went up. The nice thing is if you go all the way out to a month ago, you really see there's no variance here other than the jumbo rates. Jumbo rates are up about 1/8 from where we were. Everything else is basically flat. All right, so that's my numbers for today and what's going on to keep you guys abreast of what's going on in the market so you're an educated consumer. If you're looking to refinance, purchase a home, get pre-qualified, please reach out to us. I'd love to be able to help you. How do you find us and how do you find more about me and my team? Great question. I need you to go to therateupdate.com, and when you're there, just click, you can click here to apply. You can click here. What most people are doing, they're clicking here and scheduling a meeting. And a lot of people are just calling us. They're giving us a call at 844-775-LOAN. Ask us any and all the questions that you might have. We'd love to help assist you. The last thing I'm going to ask you is if you're in a forbearance, please, guys, don't put your head in the sand. Reach out to us. Let us help you get an end strategy on how to get out of the forbearance. So God bless, guys. Thanks so much for watching. Give me a thumbs up, subscribe down below, and I will see you tomorrow. Bye.